Jyotivardhan Jaipuria, Head of Research at Bank of America Merrill Lynch, joins us right now on the show. Jyoti, thanks so much for joining in. Before we hit market open, just an initial view from you. Are you bullish or are you generally cautious on the markets considering the run-up that we've had not just locally but globally as well?
What we put out in our last report was that we are hoping to see a correction. We think we probably get a 5-7% correction in the market, which will provide a better opportunity to buy. Over the 3-4 year view, I'm quite bullish on the markets. We think earnings as well as markets could double out over 4 years. So it's more like, okay, can we get a better chance to buy? The answer probably is yes. Our view has been from here to the end of October, we probably see markets lower by around 5 to 7%.
We're seeing dollar strength, and we're seeing for domestically some of the IT stocks doing fairly well for themselves as well. But that aside, globally the theme seems to be that there will be dollar strength, in all probability some rate hikes as well coming in, and that could lead to a 5 to 10% drop. You yourself mentioned that there could be a 5 to 7% correction as well. Could that happen in the very near term?
So like if we just rewind a bit, this was exactly what people were expecting in December of last year. If we take all the global strategists, most of them thought that, we'll have a dollar strength coming through, which didn't play out for the first half of the year. But now it's starting to play out. Rate cycle in Fed is like, it's now getting a question of when rather than will they hike rates or not. And typically, if we go into history at the period where the markets start believing that the Fed rate hike is coming, you get a lot of volatility coming through. So, India markets have had a good run, emerging markets have had a good run. So I guess, they are looking for the breather anyway. And probably this could provide one of the reasons why we get a pullback.
But Jyoti, is it going to just be a short-term correction in an otherwise lengthy bull market?
Yeah, so my call is it is going to be like one of those short-term tactical corrections which you'll get. And after that, you start getting earnings recovery coming through, the economy starting to recover. Like a lot of indicators which we look at, we track 2-3 indicators of profit cycle. All of them are indicating we are somewhere close to a bottom of the profit cycle. We could get one of these sharp upswing in profit cycle coming through. So our view is over the next 4 years, profits in India are going to double out.
So how do you prepare yourself for this near-term correction, Jyoti? Do you start profit taking already where you're sitting at money? And more importantly, is it going to be a blanket correction or more sector-specific correction that we're going to see?
Typically in these sort of corrections, it's like, most of our clients, at least the institutional side, not many of them have the ability to take cash calls, but to the extent they can, people do take a bit of cash call and keep a bit of cash coming through. In this corrections, typically actually the mid caps and the small caps probably will fall more than the large caps. That's what we always see. I guess, for most investors it is, okay, is this a time to buy or is this a time to sell? So it's really how nimble you can be. But otherwise, all your buying you have to do at dips. So, use the dips to start buying whatever you want to buy.
So do you continue to buy IT in lieu of the dollar strength, the global recovery? Because this correction that's going to happen is not going to be only India specific. We're going to see that happen in the US as well. Do you buy IT again? Do you buy defensives again?
Yeah, so our view over the next 3-4 years is IT is not something which we are hugely overweight on. We were hugely overweight IT for the last few years. And, we've made it neutral now. I think IT is going to be some sort of market performer over the next few years. In fact, our view is that you buy all the stocks which are not done well in the last few years for the next few years. So it's more like, if you get a correction in some of those, it's a time to buy. So it's like we love autos, we like the banks, we like cement. Those are 3 biggest overweight sectors. We like the oil PSUs. And so, these are the stocks you probably want to buy in the correction. As you get a pullback, you buy these stocks.
Jyoti, lot expected from the PM's maiden visit to the US. Does it do anything for the markets?
I guess we've had a couple of these visits. He went to Japan, we've had the Chinese premier come here. To that extent, what this is reinforcing is that, okay, there's a lot of attention on India. FDI flow on India is going to come in a big way over the next few years. And to that extent, it will help the recovery process. In terms of something specific, I don't really see anything specific coming, because a lot of these are things which, you're having the building blocks to have growth over the next 3-4 years. You're having FDI promises come through. It's, marketing the India story and making sure India is an attractive place for FDI.
Okay. Now, Jyoti, when the election verdict came in, everybody said that the space to buy is cyclicals, infrastructure, so on and so forth, because of the kind of spend that will happen on the infra space, and that the new government has not shied away from that. The promises are there, but somehow the market has become very wary of this infra space, stroke construction, stroke, maybe not cap goods really, but the entire construction stroke infra space. It's become very wary, and maybe the companies have to be blamed as well, at least in a couple of cases. But what do you do now? Because the stocks have pretty much come back to the kind of levels that they've started off the rally with. Are you constructive on the pocket, or will you wait before some positive or green shoots do really emerge?
So we are constructive in the sense we are slightly overweight that whole space, but our view has been these will be the late movers. So, they will take some time, because whatever the government does, getting the whole infra capex cycle back in place is going to take 12 to 18 months. It is a long process, because companies need to repair their balance sheet, excess capacity in the system needs to start working itself out. So, it is going to be something which probably will do well 18 months, 24 months down the road, but it will be one of the late movers. That's why, our initial emphasis was buy the consumer type of plays, buy autos, buy cement, because those are the early movers, and this is going to be the late mover. So for a lot of people who want to take and who are a bit more patient, they can buy some of these stocks and then wait to play it out. But if, you really want to time it to perfection, then probably you have 6 more months before you start thinking of buying these names.
Jyoti, you talked about you being bullish on auto. Would that also stand true for related space, auto ancillaries, or for that matter tire stocks, which have given good returns to investors?
Yeah, so we are bullish auto ancillaries as a class. We don't cover all that many of them, but whatever we cover, we're quite bullish on them.
Okay. Jyoti, the other bit that I wanted to ask you about is this whole Make in India launch on the September 25th. Now, there are a number of luminaries attending that. It's a big ticket show. The government promises it to become even bigger in the times ahead to come. I mean, does it have a macro impact? Do you really think India manages to attract so much of talent, so much of investment, and therefore job creation, so on and so forth? And is that a big net positive over the course of the next 1 year? Or even this will be backdated? Maybe it takes shape and form and benefits come in over maybe after 2 or 3 years?
Yeah, so, essentially it's a great slogan that, Made in India has to become a theme. Now, at the back of that, there are lots of things which need to be done to ensure that this comes about, which, not all of that can be done in 1 year. It is going to be a slow and steady progress. So what, one is marketing that whole brand, that India stands for good quality product. Second is you probably need to first cut off a lot of the red tape which is there, and which, this government is really focused on. In fact, that's the first thing he really spoke on, that, governance means cutting down a lot of the layers of bureaucracy which is there, ensuring faster decision making, and, empowering the bureaucrats that, you take decisions in the right course and I will protect you if something goes wrong. So those are the things which will take time. It's, changing the whole culture of India, changing the whole mindset, which will happen slowly, but you have to get it moving somewhere, and it's great that we've started that process.
Jyoti, last couple of questions really before we let you go. One is on banks, and we've seen a dichotomy in the last few days between the private banks and the PSU banks, maybe rightly so as well. What's your underlying theme? Do the slightly more expensive private banks keep on becoming more expensive compared to the PSU banks? Or at some point of time, even the macros come into shape, or bottom fishing comes into play, and we see even the PSU is starting to make a bit of a comeback?
So, for the last many years, we've been avoiding the PSUs. Our theme has been by the private sector banks. We still continue to like the private sector banks, but our view now is we are positive on the PSU banks. We think over the next 12 to 18 months, the PSU banks will do well, because as the economy recovers, we'll have NPL figures, NPL worries subsiding in a lot of these banks. And these banks, then, people will start saying, okay, they're not that expensive. We know all the historic issues, but probably things are changing for the better. So our view is now more constructive on the PSU banks than it's been for the last 5 years.
Jyoti, it seems like a gas price decision could be in place this week. Are you liking the entire sector as a whole, both OMCs and ENPs?
Yeah, so, we like that whole space, and, there are two things which drive it. One is, of course, the gas price is going up, and the other is the fact that we think subsidies will keep coming down, and as subsidies come down, then it will be easier to at least track these companies as normal companies. So, it's a space we are overweight on.